But let's talk some levels and the outlook for the session with Mr. Kevin Green. Tech okay this morning, just NVIDIA down in the Mag 7 KG, kind of a mixed message across the board. What are you seeing?
Yeah, I'm seeing the same thing. I mean, I would not be surprised if we do see a little bit of compression here. If you're kind of looking at the intraday chart to the upside, the first area that I'm going to be looking for is 5,800. Now, you can make kind of the case that that could actually be the primary area of resistance for the market here today, but I have it kind of as the secondary or the first area of resistance. To the upside, I'm looking at 5,820, 5,820, 5,825. That's what you're kind of seeing when it comes to the call flows here. And then to the downside, still a wide range. 5,705 is something that I have there on the radar. I think the biggest threat to this market today, Oliver, is going to be the consumer confidence data. What do we already have priced in? How low is the bar for us? And if we are able to kind of see that number exceed those expectations, I think that would be bullish for the market. But if we do see a very dramatic drop in consumer confidence, I think you'll see the put flows really kind of step into this market right now. But overall, you're still seeing breadth in the market. I think we have about 65% of stocks in the S&P 500 in the green for right now, which is decent. We had a nice little run yesterday. Even if we come back and just kind of retest 57.45, 57.50 and bounce higher, I don't think that's actually a negative here. I still think that we need to hold at least 57.10 for us not to see an acceleration to the downside and really kind of give up a lot of these gains here. So call side skew, still a little bullish here today, but I think today, out of any of the days this week, even considering PCE on Friday, I think consumer confidence is the biggest risk that we have. That's the biggest soft data that we have for the week this week, and we haven't been responding really great to soft data.
Well argued, perfectly in line with what Alex and I discussed this morning. I like when we're all on the same page. It makes me feel like we've got a pretty good handle on the narrative. Today is about holding, right? Today is just about locking in yesterday, not giving too much back.
Yeah, for the most part. I mean, I think you still want to kind of see a little bit more of a follow through. You don't really want to see, especially if you kind of go to the daily chart, what you don't want to see.
But to your point, the data today the data kind of bend negative generally. Today, I see the data as an uphill battle.
Yeah, today is the data is going to be an uphill battle. Yeah, for sure. And if we kind of go to that open interest of that daily chart here, you actually get a little bit more of a sense of what I'm kind of talking about here. So obviously we closed above the 20-day moving average, closed above the 200-day moving average. Right now, we're kind of hitting this channel line resistance area that we have kind of had some issues with in the past here. That's sitting at around 57.80, 50 or 57.85, 57.90, kind of depending on how you draw this line here. So this will be a little bit of an area of resistance right now. What you really don't want to see is a pullback and us kind of going back and testing that 20-period moving average, especially closing in that type of fashion. I think that would be the biggest risk. But if we continue to see breadth expanding, I think that's going to be a good thing. RSI still making higher highs, making higher lows. There is a little bit of a trend line where we still need to kind of break it, that trend line at 56.4 on the RSI. If you can break above that, I think that's going to be another key area for the bulls in this market this week. But yeah, we want to maintain. I think we still want to advance. If we can get above 5,800 and close at least at 5,800, I think once again, it just gives the bulls a little bit more confidence that they're gaining a little bit more traction here. If you're looking at the retracement from high to low, from the 61.47 level down to the 55.04 level, that retracement is sitting at around 58.40. 58.35. So if you break above that 50% retracement, that means, you know, bulls are back in charge, or at least we're at a little bit more of a stalemate when it comes to positioning and market direction.
Okay. Love that. Love the technical analysis. KG, I know you got a long-term NASDAQ chart as well. Hit me with that, because we did reclaim our 200-day moving average, or where are we?
Yeah, so we reclaimed the 200-day moving average for the NASDAQ 100. It is testing its longer-term uptrend from the October lows. So usually when we have support, if we break through support, it could act as resistance. We're basically testing that right now. So once again, kind of like I don't want to say make or break, but this is actually a fairly key area that you want to see us kind of power through on some very large volume. Long-term RSI still making lower lows or making lower highs for that matter. We haven't broken that trend line. I actually have it fanned out here. You can see the bearish divergence that started in June of last year, a very long bearish divergence that obviously is correcting right now. And then we also still have a lower high on the on RSI from December of last year. So we're still making some ground here. MACD is actually looking pretty good. And I would, yeah, I don't know if you want to kind of talk about this chart a little bit more, but
well, great lesson on the bearish divergence there. I guess I missed that was happening on the way down. So it's one of my favorite technical indicators for high beta assets. So it really worked well, kind of signaling that top we just went through.
Yeah, well, the longer term bearish divergence happened in June of last year. So here's the thing. When you see a bearish divergence, it's really hard to short that until you actually see a topping pattern. So even if you started to short when that bearish divergence emerged, right, you would have got your face ripped off in this market. So you kind of wait until the price action kind of tells you, okay, here's actually that full correction. I also have the E-mini S&P 500 chart. I wanted to give an update on these anchored volume weighted average price. We call them anchored VWAPs here, right? Right now, once again, testing an area of resistance. If you're kind of looking at the August 2024 lows, we broke through that level to the downside. We're testing it as an area of resistance, but we have been able to reclaim a couple of these anchored VWAPs here. The April low anchored volume weighted average price, we broke above that. We also broke above, well, we're basically testing that August level literally right now here, and you can see there's kind of a little bit of a volume node that's sitting at that yellow line that we have for the September lows. So we're making some ground here, but this is kind of an area of resistance to be mindful of for now. But once again, try to continue some gains here to the upside. I think that's the name of the game for today, and hopefully the sentiment data does not rock us too much. And then news flow. We don't want that to kind of reverse from what we kind of had as far as good sentiment yesterday. If we see that kind of reversal today, then obviously that's going to put some pressure on the markets.
Great stuff. Thanks, Kevin Green. Nice work on the technicals, good setup, and good context for the long term and the short term.